Hi everyone, welcome to video series of Accounting Basic for Beginner. In this episode, we'll discuss a very basic yet important topic in accounting called the accounting equation. Even though it sounds complicated, the concept is actually simple and logical. Let's break it down step by step. Why is accounting equation important? Because it serves as the fundamental foundation of the entire accounting system. Every financial record, report, and business decision is built upon this equation. The accounting equation states, assets equals liabilities plus equity. It means that everything a business owns, its assets, always comes from two sources. Liabilities, which are obligations to external parties, and equity, which represents the owner's investment in the business. Let's illustrate with a simple story. Imagine a business idea selling popcorn. The business owner invests $50 in capital. For the business, this money is called an asset because it's cash, but on the other hand, the business also owes the business owner, called equity. So assets are $50, and equity is also $50. It is balanced. Now, for example, the business needs additional capital to purchase equipment. The business owner borrows $10 from another party. Cash increases by $10, meaning assets increase. But because there are obligations to be paid, liabilities also increase by $10. Total assets are now $60. Total liabilities and equity are also $60. Still balanced. Then, $10 is used to purchase a pan. Cash decreases by $10. But equipment increases by $10. The total value of assets remains unchanged. Only the asset category changes. The equation remains balanced. Then the business owner starts production. The $5 corn purchased is processed into popcorn, which is sold for $8. As a result, cash increases by $8, inventory decreases, and there is a profit of $3. This profit increases owner's equity in the form of retained earnings. Total assets increase to $63, and the liabilities plus equity also equal the value. Up to this point, we can see that the accounting equation always balances, regardless of the transaction. Now, let's summarize. Assets are everything a business owns, such as cash, inventory, accounts receivable, buildings, and equipment. Liabilities are the business's obligations to external parties, such as accounts payable, bank loans, or taxes owed. Equity is the business's rights, which can be in the form of initial capital or retained earnings. When all this information is compiled into financial statements, we get a balance sheet, which is a snapshot of a business's financial position at a point in time. By looking at the balance sheet, we can determine the financial health of a business. In summary, the accounting equation is assets equals liabilities plus equity. This equation is not just a theory, but the foundation that keeps the entire accounting system running smoothly and logically. If this was helpful, appreciate if you hit the like button and share this video, and don't forget to subscribe. I'll see you in the next video.